feel it's my time, think it's my year, yeah.
Oh man, good morning everybody. Happy Monday. Welcome to the morning show here on Stock Market TV. I am Spencer Israel. You know, we've got JC Parets and Steve Strazza here as well. We got a lot to catch up on. Busy weekend. A lot of things to discuss. A lot of things happening this morning. Got the good old fashioned Sunday night breaking news item. I love when news breaks on a Sunday night. So that's fun. But we got some charts to discuss. Some weekly charts in particular. A lot of weekly charts not looking too great right now. But we knew that. It's September, right? This is what happens in September. We knew that. Okay. Guest today, Jason Leavitt, the founder and head of research at LeavittBrothers, will be on the show in about 20 or so minutes. We'll have Kimmy Sokoloff on after that. And you know the drill. Smash the like, hit the thumbs up, tell your friends, tell your neighbors. Good morning, chat. How are we doing? Let's roll.
All right. How's everybody feeling today?
Good morning. How about those Miami Dolphins?
I don't even know what to feel. Like I feel like guilty. I feel like I'm doing something wrong. Like this is not something that I'm used to, you know, having such a dominant offense that can score at any time, having a franchise quarterback, having a coach that can actually, you know, make real game time decisions and like manage the game properly. Like
Stop. I'm going to push back on that. What a bonehead move it was to go for it on fourth down from your own 30-yard line. What was that about?
Dude, Spencer, do you want to smack him or should I?
Dude, I would say that Mike McDaniels is like miles like ahead. He's the coolest coach in the league by like a mile. It's
just
not
we're calling him out for going for it on 4th and 1. By the way, the defense stopped him on 3 and out.
He's the coolest coach in the league. He can do whatever the heck he wants. All right.
This coming from a New York Giants fan. Who'd they lose to this week?
Whatever.
Did they lose to a girls team or was it a real team?
No, the 49ers are actually good.
Oh yeah, the 49ers are actually good. They look better when they play the Giants though. Don't hate on Mike. Are you really? Miami just put up 70 points and Straz is hating that he went for it.
It was so impressive, but I was sitting there saying to myself, what is this about? Like, I didn't understand that fourth down call. But no, that was a crazy.
You wouldn't understand it because you're a technical analyst and not the head coach of the greatest football team of all time.
It was probably not the right call, but of course it didn't matter.
Dude, he's going to make that call 100 times out of 100. When you have the best offense of all time, you go for it on 4th and 1. It's fine.
Even in the second half, when they were just running the ball, I mean, every other play was like 40, 50-yard run.
I know, this kid A-Chain, what a stud, man. What a stud. It's like having Tyreek Hill as your running back. He's faster than Tyreek Hill, by the way.
How much of that is Miami is just a powerhouse, and how much of it is Denver is bad and clearly gave up?
Probably a little both.
Well, do you think they played well at New England in prime time? They beat the Chargers at LA. You were there. You know,
it was the number 1 ranked offense in the league, I believe, going into the game.
Who?
Miami, right?
Yeah. Ever.
All right. Enough of the football stuff. Although I do have a football thing for later. Can we get to state of the markets?
I mean, I could just keep watching replays of the game. I was up all night last night just watching just highlights over and over and over again. I have mental problems.
And without one of their best players, no less. But let's get
without Waddle, by the way.
Let's get the state of the markets.
Are you still more excited about the Hurricanes?
It's hard to be more excited. I mean, the Dolphins look pretty freaking good, bro.
Yeah. All right.
But yes, I'm happy about the Hurricanes too. But yes.
Is this like the best time for sports in JC's life? It might be.
Listen, they started out good last year too.
Both teams are undefeated going into October.
Jason,
things are going pretty well for me, Spencer. We
All
call
right.
these uptrends.
Things are not going as well in the market though. So let's take a look at that.
Not for the longs.
Nice segue though. All right.
All right, so we're going to look at a chart here that I like to call the New York Giants of the of the stock market, right?
Oh, yeah?
So this is your median stock. So nowhere near the best team, probably not the worst team, more like in the median, right there, the New York Giants, right? Is that about right? Just right mediocre, right? In the smack that. Is that about right there, Strazza?
Yeah, that's fair.
See what I did there?
Mm-hmm. Mm-hmm.
They got some good things. They got some bad things. Not good enough to be good. Not bad enough to get a good draft pick. You know, kind of like, right?
Fun guy.
So here we're looking at the value line geometric index, ladies and gentlemen. And this is, I mean, you can argue that this is the most important index in the world. I don't necessarily know that I would make that argument, but you can. Right, Strazza? How do you feel about that?
It's the most important for information, but obviously the S&P is the most important for people's money, right? So it depends on what's your objective. What do you mean when you say most important?
No, that's a good point. No, right. That's why I'm not necessarily going there. But this is an important one, right? This is your median stock, right? So this is not, mega cap, what do they call it? The Magnificent Seven. Right, like this is not the Nasdaq 100. It's not the Russell 2000. There's about 1,500 stocks or so. This goes back to the 1970s. We got 76, something like that. We got almost. I mean, the Dolphins haven't even won a Super Bowl since this thing has existed. Right, it's been a while. Right? I earned this one. I earned it.
It's probably the best or broadest representation of the entire stock market.
Yeah, that's probably a good way to put it. This is the median stock. Go back to your statistics class. It's very different than your average stock, right? This is your median stock. We're right in the middle, and you think that diagonal trend lines are overrated. I do too. I think we're more interested in the horizontal ones.
Yep.
Which here on the value line geometric index is sitting right around 600. So with the value line below 600, messy for longer persists. We've got a lot of data suggesting the exact same thing. Sideways, messy, right? However, messy. See what I did there? However, if we break out above 600, and I'm not saying that that's going to happen today or tomorrow. In fact, my suspicion is it will not happen anytime soon. Maybe next month. I don't know. But a breakout above 600, I think, would be probably one of the most constructive events for this market of anything out there that I can see. Would you agree with that? 600, that overhead supply there?
Yeah, 600 is those pivot highs. I think if you zoom out, 600 is a really big level. It's those prior cycle highs too. And
then you're looking at, those are the August highs at 600. They're also the February highs.
But zoom way out. What we're like.
No, I understand. But I'm saying in a more short term, remember in August last year, that's when the rally off the June lows peaked, and then we sold off. And then again, we had that ripper at the beginning of the year and then corrected. This essentially shows that. And then we just had that rally into July, of course, once again, and the correction that started immediately thereafter. So the market is representing some key local highs here that you can see in some of the other indexes. And it's really only this is the only index that is as clean, I think, going back to those August highs. A lot of the large caps are already well above that, retesting those former highs, all of those things, right?
There's not a more important level than the August highs right now. Even if you looked at something like the S&P 500, now the question is, will it hold the August highs, right? I got
another index here, Mr. Strazza, that, again, one can argue is the most important index in America here, representing almost 30% of the S&P 500, representing half of the Nasdaq 100. And that's the technology index, failing at those former highs. So when you've got a third of the market here stuck below those 2021 highs, it's going to be hard to get going. So, we're looking at, call it 175 or so, a breakout above that in technology, a breakout above 600 in the value line. Now we're talking, but, that it's got some work to do now.
Yeah, I have something to say about these patterns when you're done with your state of the markets. But it's not just the U.S. indexes or the strongest stocks in the U.S. that look this way.
Why don't we look at the strongest stocks and look at the NASDAQ 100? That was certainly one of the leaders. Best first 6 months to a year in history, in the history of the NASDAQ. And here we are with the lowest weekly close since June. Looks more of a range to me. I don't know how much weight I put on this uptrend line from those lows from the beginning of the year. It's more of a rate of deceleration, I suppose, or a lack of acceleration is really what these trend lines mean to me. But nevertheless, more importantly, lowest weekly close since early June, Strazza. And then it's not just in growth. It's not just in tech. Look at the next one, industrials. Again, I'll say it again. You can argue that this is the most important index in the United States, right? It's the most diversified. You got a whole ton of stuff, very highly correlated with the S&P 500. Again, stuck below those former highs. So you're seeing it across the board. And then the last thing that I wanted to point out, as we've seen money coming out of stocks and other risk assets, right? And we've seen money flowing into the only defensive asset that we have out there, the United States dollar, is proven to be the only safe haven. With real rates doing what they're doing and the dollar ripping, pull up silver. How's silver holding up so well?
Really? Is it?
Is it not? How is silver holding up so well?
I don't know, man.
What do you mean? If I would have told you the dollar would be doing what it's doing over the last couple months, and I would have told you that real rates are absolutely ripping, what would you have said? Precious metals murdered, right? Murdered. Destroyed. Like, that's it. Gold to zero. Like, just murdered. And it's been anything but.
I'm just going to say what I think.
It stands out. Stands out.
Fine. Yeah. Remember what I said last week? I don't think about silver. Silver doesn't cross my mind. Sorry, silver.
You're so full of shit.
I don't think about it. And I think I'm better off for it.
You might not be thinking about it right now, but don't say that in the past you haven't been thinking about it quite a bit.
Oh, there have been moments where I've thought about silver.
Right. It's just not right now.
In my dream.
Again, from a sentiment perspective, I think your comments here sort of explain the overall sentiment. I feel like a lot of people aren't thinking about it.
Why would
I'm thinking about it only because gold
why?
and silver should be getting destroyed. They should be getting murdered right now with what rates and the dollar are doing, and they're not.
But shouldn't tech stocks too? Right? Can't you say that about a lot of things?
Tech stocks just closing new lows. What do you mean?
Shouldn't Bitcoin destroyed though? They're not getting destroyed.
Well, I don't know about Bitcoin, but tech is making new lowest levels since May.
I don't know.
4-month lows? Are you not entertained?
Maybe.
What else you want? I mean, yeah, tech is getting hit, right? Makes sense in an environment that is stuck below overhead supply during the seasonally weakest time of the year. It's perfectly normal. However, precious metals holding in there pretty good. I'm just saying. I don't own any. I don't care. That's not true. I own a little bit. Like the privates.
Oh.
I got some junkiness in my life.
Yeah.
That I don't need to mention any ticker symbols, but yes, I have some. Nothing meaningful.
Yeah.
But I'm impressed. I'm not gonna lie. I honestly, this is one of those situations where it's like, well, if the dollar's doing this and rates are doing this and the market's doing this, and this should happen. But it's not. Right? There's not. Yeah, there are way better alternatives than gold. Yeah, NASDAQ Poppy, everybody agrees with you, bro. Everybody agrees, right? Even Strazza's here is like, I don't think about it. Just saying. It's interesting. All right. So what you have in mind globally?
Chart. I'm gonna move this order around here. Chart 6. So you showed tech already. You showed industrials. They look the same. Semiconductors look like this. Home builders look like this. The German DAX, which has very, very few of both of those groups, mind you, also looks like this. It's just the strongest stocks all around the world are dealing with overhead supply, is the point I'm trying to make. It's not any certain group. It's just the best ones. Best ones are struggling at key levels. Until that changes, it's going to be hard for the broader market to enjoy higher prices. That's it. They got to get through these levels. And we have a lot of charts that we could look at, right? So what do you do in a situation like this as an analyst? Make a list of all these charts, right? And monitor those levels. Like you said, it's not going to be tomorrow, but maybe next month or by the end of the year, things turn around, they find a tradable low, and track how many are getting back above these resistance levels.
That's right. And it's what's interesting is that as we were first approaching these resistance levels, as you recall, we were keeping an eye on other stocks and industry groups and sectors that were approaching those highs to see what they would do. Remember?
Yeah.
And so here we are still doing that. And Strazza, by the way, I don't know if you realize this, but a third of the German DAX is tech and industrials.
How much tech though? No, I said there's very few semiconductors and home builders is what I said.
Right. But we were just looking, I'm just telling you, we were just looking at tech and industrials in the US, and the German DAX is 15.5% tech, 17.5% industrials. So it's a third tech and industrials, which we were just looking at, stuck below overhead supply. And you got 18% financials, 16% discretionary, 11% healthcare.
What's the CAC 40? Throw up France. Check the CAC.
A lot more industrials.
A lot less tech.
A lot less tech. No, the same amount of tech.
Really?
Hold on. It's sorry. No, you're right. You're right. There's less tech. We're looking at 24% industrials in France, 5% tech, 20% consumer discretionary in France. Got a lot of LVMH and the old Hermes.
Yeah.
Howard Lindzen calls it Hermes.
Yeah, there's a lot of high-end retail. Like, it's funny, right? Isn't France's index dominated by like luxury brands while ours is dominated by tech stocks?
And, well, you got energy with Total, 7.5%, Sanofi, healthcare, 6.5%.
Yep.
And then you got L'Oreal, you got LVMH, of course.
I got to tell you, they got the good pharma stocks overseas. If you're a healthcare investor, you got to go outside the U.S. these days.
Netherlands, more specifically. No,
the best ones are in Europe. They really are.
Tell that to Eli Lilly.
Sanofi, AstraZeneca, GlaxoSmithKline,
Novo
Nordisk, obviously. That's the big one.
They're all overseas. And then we got Pfizer. Look at that piece of garbage.
We got Merck, though. Merck's not terrible. Bristol.
Merck and Lilly have been good. Sure. Merck and Lilly have been great.
Who was I just talking to about these healthcare? Oh, I was at a birthday party on Friday, and I was talking with a gal over at Moderna, and she was telling me some stuff. She was explaining to me how they're direct competitors with any company that makes vaccines, but Pfizer, although they're a direct competitor in the vaccines, Pfizer does a whole bunch of other stuff. It was an interesting conversation.
Yeah. Right.
I like how dynamic I can be at birthday parties. Like I was at a birthday party the other day. We're talking about energy stocks. On Friday, we were in the next to the bounce house. We're talking about healthcare stocks. Right. I went to another birthday party. We're talking about crypto. Like I'm very versatile. In my daddy.
Banking friends. You talk to your friends about banks. Yeah.
Yeah.
You have gold mining friends. Yeah.
What's funny is that, when they find out that like I've been on TV, they're like, oh my God, they think it's like a big deal. I'm like, no. It's not. It's really not. Any idiot could be on TV. Like you should, let me tell you about some of the people that go on TV. The fact that I was on TV once doesn't, the locals get a kick out of it when they find out. Like, oh my God, I saw you on.
Yeah, that's because JC lives in middle America.
Well, as you start, I don't live in middle America. It doesn't feel like it, but as you start heading west, people start getting fatter and like fewer teeth, as you go west in PA. In Eastern PA, it's pretty normal. It's like New York City suburbs. But as you start going west, it starts getting weird quick.
All right. Let's see if today's guest has thoughts on any of this. Jason Leavitt, he's the founder of LeavittBrothers, and he's a good friend of option Sean McLaughlin. So Sean has told us to be nice. So Sean, we'll be nice. We're always nice. We're always
Yeah.
nice. All right. Let's bring on Jason here.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Jason, what's up?
What's going on? Good morning.
What's going on, Jason? How are you?
Very good, JC. Good to see you.
Likewise, for sure. Man, you got a lot of books there, huh? You read all those or just showing off?
I've read a lot of them. Some of them are on my waiting list, but they're coming.
Dude, you're telling me, man. I got so many books. I got 3 kids under 3, so I'm not doing a lot of reading these days. But so I have a long list. So I got a lot of books of which I've read most. Some I've skimmed, like The Alchemy of Finance. Like, I'm not reading that. But right. I did, kind of look through that. And then I've got my list when somebody who I love and respect is like, oh, you got to read this book. Like, I don't even think about it. I just go to Amazon and buy it, add it to the list, right?
I've been the same thing, buying stuff on Amazon, used bookstores where I'm like, this is $4. It's been on my list. I'll grab it and I'll read it later. And then sometimes I get to it. Sometimes I still sit on my list, sitting on my shelf.
My wife thinks I'm crazy. She thinks I'm bananas.
No. Everyone needs a robust bookshelf of books they haven't read yet. Yes, I have
right. One day when I have all the time in the world, I'm just going to wake up in the morning, get some coffee, and just start reading for a few hours every morning. Like, one day I will be there.
I say the same thing, but it's not going to happen.
You don't think it's ever going to happen? I'm going to wake up every morning looking at futures ready to go.
My new litmus test is I ask myself, I'm only going to get this book if I think I'm going to read it more than once, or if I think it's a great book that I might be able to give to my kids one day because it's a timeless book with a message that doesn't matter if you read it today or in 20 years, it's the same. So that's my new litmus test for like just collecting books.
That's pretty good.
Nice,
I mean, maybe I need to set some guardrails on my Amazon purchase as well. No, I like that. Well, Jason, listen, thanks for being here. This is the morning show. We like to bring on guests and the audience is sick of hearing me and Strazza arguing about emerging markets. So, we like to bring in smart guests with different perspectives, and I kind of just want to open it up to you. Like, what's on what you kind of caught a little bit of what we were discussing before. What's on your radar?
So to me right now, the market is just kind of as messy as it's been in a long time. Bottom Q4 last year, moved up, really great rally the first 7 months of 2023, started pulling off the highs, and now it depends on how what time frame you look at. If you look at like the market since the lows, it looks like we're in consolidation mode in a mini uptrend. If you back the charts up 2 years beyond that, and for the weeklies and dailies, it looks like we might have a double top. I personally have more cash right now than I've ever had.
Yeah.
And I can ever remember having. So my bias, my conviction level is at the lowest level it's ever been. I really just, I could argue that we're going higher. I can argue we're going lower. 6 months from now, half the people are going to say, I told you so. The other the other half the people are going to say, just disappear. Like at this stage, there's no strong bias, no strong opinion, no reason to like dig your heels in and defend any type of position. The market's got to show us cards before getting aggressive at all.
So question about that, Jason. The criticism of going into cash is always, well, you got to be right twice, right? You got to be right on the way out and right on the way back in too. So how do you get back when you have a larger cash position in your case?
So how do I get to cash?
Or how do you get back? How do you know when to get back in? Is my question.
So my top 2 indicators, which if I'm in cash, I'm not going to have access to one of them. My top indicators, I'm going to just pull up TC2000. I'm going to look at 500, 600, 700 charts, and I'm going to start categorizing them. And I'm going to pull out the best charts that look like good longs. I'm going to put them in one group, and I'm going to pull out the shorts that look like good shorts. I'm going to put them in another group. And based on that, just based on looking at 400 or 500, 600 charts, I'm going to have a pretty good feel for what the market's doing. So to me, it's not the S&P. It's not a special indicator. It's looking beneath the surface and seeing how many really good charts I have. So when we got into early August, at the end of July, I had, 100 good long charts and like no shorts. By the time we got into August, it started getting equal. Like I had equal amounts of both. And that's my indicator. That's my signal. So when you say, how do you know when to get back in, is because every week I'm going to go look at 500, 600, 700 charts, And when the market is ripe, when it's good, when it's improving, when it's getting less bad, my long list is going to grow, my short list is going to shrink, and that's going to be my best indicator that, hey, things are better or less bad, or it's time to start, getting a little bit more active. So that's my thing. If I'll miss the bottom, I have no problem doing that. I have no problem just standing aside, let somebody else with their money pick a bottom. I'll get the second move, the third move. So I'm not worried about being a little bit late. So that's what I'll do. I'll look at a lot of charts, and when my long list grows, my short list shrinks, and I'll know the bias is shifting in that direction, and it'll be time to start to put some money to work.
I want to stop you right there for a second, because this is a really important point. And for those of you in the market that are listening to what he's saying, what he's reiterating is that this is a market of stocks, right? And if you are focused on every little move in the S&P 500 and you're obsessed with the NASDAQ 100, you're missing what's happening underneath the surface. So indirectly, and you could stop me if I'm wrong, Jason, but indirectly what Jason is doing is really creating a sum of the parts and sort of analyzing, okay, on one hand, you got this, this, and this, and these charts look great. And then on the other hand, you've got this and this. And depending on, how it's, you're letting the market tell you how to proceed, as opposed to just, obsessing over an index and deciding whether you're going to buy or sell stocks. You're doing sort of a weight of the evidence, sum of the parts analysis. Do I have that right?
Yeah, that's right. You can go on to Twitter. There's no shortage of arguments about, hey, the market did, the market rallied 10% in January through July. It's down in August, September. That means we have X% chance of moving up the rest of the year. And there's arguments both ways about what the market's going to do 3 months out, 6 months out. I just look at 500-600 charts and I just let those guide me. To piggyback off what you said is that, the S&P is an average. Okay. And obviously it's weighted, so the top stocks are going to have greater influence, but it's an average. So if I wait until the S&P 500 gives me a signal, I'm late, because the leading stocks are going to move weeks ahead of time. Then the S&P will give me some sort of signal. Then the others will come along. So if you wait till the S&P gives you a signal, you just miss the top 40, 50, 60 stocks, which have already moved. And those are probably going to be your best winners. So you could decipher here that I'm a bottom up analyst instead of a top down. I'd rather look at 500 charts rather than the S&P, because there's information in those 500 charts that don't show up at the index level.
Jason, what universe do you look at? Is it just the 500 stocks in the S&P, or is it more than that?
What I do is I pull up the Russell 3000 and I rank it by volume, and I'll just go through the list, and I'll just go through the list and look at a bunch of charts.
That's actually a good way to do it. I like that. I hadn't really quite thought of it like that, but that's definitely one great way to do it. Nice. I like that.
Yeah. There's a couple other minor scans that I do where I'll look for stocks that are above, a certain percentage above their 10-day moving average or their performance over the last 10 days. And I'll rank them based on that. And that'll just give me the strongest stocks over the last 10 days, the last 20 days. But I'm basically just looking at the Russell and just volume, and then just go through the list. Jason, again, I get a lot of valuable information just looking at a lot of charts.
Yeah, Jason, you mentioned a lot of cash, myself included. I can't remember the last time I've been in this much cash for this long, actually. Now that I'm thinking about it. When was the last time? Probably maybe last summer, maybe. But either way, what about your short exposure? You haven't mentioned that. Do you have any? Is there a reason? Do you not short? How does that work?
I am mostly a long trader. My take is that I want to maximize opportunities when the market's acting well, when it's trending up, when it's acting well, when stocks are breaking out, holding their gains, respecting levels, respecting moving averages. And my focus is I want to maximize opportunities there and make as much as I can. And then when the market turns down, I'm more than happy to step aside and have much less exposure. I'll take a couple inverse ETFs. Okay, so I'm long SOXL now, and I'm long the short triple Qs. But otherwise, in a given year, if we have some up and some down, I want to be heavily long during the up, and I'm going to be poking a few of the inverse ETFs when we go down, but I'm not going to be super aggressive. And the reason why is because I found in the past that if I'm aggressive to the short side, then I start rooting for the short side, and I'm not really looking for longs, and then I miss the turn. And I'm just better off like, hey, if I take a few weeks off where I just have minor short positions, minor index or inverse ETFs, I'm better off because I'll make up for it. I'll easily make up for it during the next uptrend.
I love how self-aware you are, and it's really important. For those of you listening, again, Jason keeps dropping bombs here. This is a great one. He knows himself. It sounds to me like there's a lesson you learned the hard way. Maybe you were short early in your career at some point, or maybe a few times, and you missed some longs because you're so focused on the shorts. Is it rhyming a little?
It's exactly right. Unfortunately, it's just one of those like human conditions that like we view the market through biases, and those biases are created by either past experiences or based on our current positions.
Yep.
And I just know myself, if as soon as I have a position, I'm kind of sort of rooting for that to do well. And then great, you made 10, 15% on the downside, but you just missed the beginning of a great rally, which you would have made much more.
That's exactly right. 100%. I just want to change the subject. Did you have something to ask there?
Well, yeah, I'm like very interested in this whole like re-entry conversation. So like, let's just say hypothetically, you've been watching the charts, you've seen them turn. Okay, your long list is getting long, your short list is getting short. Time to go put some money into work. Would you like nibble in, or how would you go about the re-entry there? Just small trades at first, or just you're in?
No, they would be smaller trades at first, but smaller trades meaning I'm not going to just go all in and like have my entire portfolio in, but I'll trade the best charts. I'll trade. Okay. So like if we've been in a downturn and then the market turns up, the best charts have already been basing for a little while, and they're going to pop out of bases on strong volume. They're going to hold their gains, and those are the ones I'm going to go after. And I'll enter those.
Okay.
Jason, outside of stocks, right? When you talk about treasury bonds, you talk about precious metals, maybe some energy, kind of like stock alternatives. Are you like a stock only guy, or do you venture into some of the other stuff?
Stocks only. If I trade oil, stocks, it's because I'm just looking at the charts and the charts looks great. If I trade gold or silver, I don't own any physical gold or silver, but if I trade those, again, it's just, I'm basing it based on the charts. And, like there's gold bugs out there and silver bugs, and they get all emotional about, dollar this and interest rates that. And like, to me, it's just, if it's in the charts, it's in the charts. I'm just going to follow those guide me. I try to think of it as like, I don't have to decide whether to be long or cash. Like the market will tell me what to do. And then it gives me follow-up. If trades work out, then that's feedback that I use to continue on. Or if the trades don't work out, then that's feedback I should listen to the market. And
that goes for, and treasury bonds too, like the TLTs or IEF or any of these things, or you just ignore that altogether?
I ignore it. The great thing about trading is, for most people, trading is the hardest thing they'll ever do.
Yeah.
But the great thing about trading is that you can clearly define a specific way to operate in the market that works, that fits your personality, and you could just focus in on that and pretty much ignore everything else. JC, you're a baseball player. Think if you're a baseball player, you can say like, hey, my favorite pitch is like that thigh high fastball in the inner half. I'm like only going to swing at that. Well, in baseball, if you got 2 strikes, you can't do that. Yeah. Well, in trading, you can do that. In trading, you can very specifically define a specific setup. You could study it. You could learn it. You can learn the nuances of it. You could figure out what market conditions it works best in and what market conditions it doesn't work in. And you could just do that one trade, maybe 2 trades, because the market's going to change a little bit. And you can ignore everything else. You don't have to be a jack of all trades, no pun intended. You don't have to be the most interesting person at a cocktail party, or in your case, at a birthday party. You could just zero in and just focus on doing one thing well and just leave everything else alone.
You guys listening? This is beautiful. I couldn't agree more. This is a very selfish endeavor. I think it was Uncle Warren who said there's no called strikes in Wall Street, right? Yeah. You don't have to swing, right? And I was a pitcher, and so calling me a baseball player is a little bit of a stretch,
All right, Jason, all this being said, are there any charts that interest you right now, or that have most of your attention?
So, like I said at the beginning, the market is as non-committal as as I've seen it in a long time. The best group right now is uranium, which is just not interesting at all because it's a small group, small market cap, not a whole lot of volatility there. I recently seen some gold stocks do okay, but they're kind of splitting. Some of them are doing okay coming out of basis. Some of them have fallen
Like
back
what?
into
Like
basis.
which one? Like which one?
Oh, I think Newmont Mining was one that moved up. Let me
This thing hasn't done anything my entire life. This thing's
yeah.
flat for my lifetime. I'm 40.
Yeah. So, but otherwise, no. It's like the large, the mega caps, tech have kind of been, they're forming topping patterns, maybe they're consolidation patterns within an uptrend. Industrials have done well, but overall, it's just things. I want to trade when I have too many charts to trade because that's like a strong wind at my back. I don't want to trade where I got to find that one great chart in a sea of mediocre.
You're not trying to get cute.
No, I just like, I want the wind at my back, and then when there's 50 great charts to be had, I'm going to pick a couple of the ones that fit my criteria the most, and I'm going to go with it. And the fact that there's 50 coming up behind me is a strong tailwind to help push me. I don't want to trade that one great chart when like everything else is a mess. So like there's not that much that looks interesting right to me as far as individual stocks go. I'm content to be mostly in cash.
I love this. I love this. Get Jason back here soon. This is great. So many great gems. Love it.
Before we let Jason go, Jason, I understand you're a Cubs fan, right?
Big Cubs fan, yes.
Okay, so if the playoffs started today, they would be in. Are they gonna get in though? Is my question to you.
They're gonna get in. They're gonna get in.
Okay.
It's gonna be tough. They got 6 games to go, and they got to play the Brewers and the Braves. Okay. And I think the Marlins play the Nationals and the Pirates. So we got a much tougher strength of schedule, but I think we're gonna get in.
All right. Good luck to you.
Are you in Chicago, Jason? Is that where you're based?
No, I'm in Denver.
Oh, we kicked your ass yesterday, man.
I'm not a Bronco fan, so you can make all the fun of me you want.
Good for you, because I was getting text messages from my friends in Colorado, like with the white flag, like just stop, enough,
Yep.
Nice. All right, Jason, appreciate it. This is great.
You're welcome. We'll see you guys again.
Have a good one. Yeah, that was a great conversation. You know what's funny? I don't know if there's been a guest that seemingly has agreed with you or you've agreed with more than that. That was interesting.
Listen, he's a very smart guy, clearly.
Yeah.
All right, let's do a little futures rundown, and we'll get to what's happening this morning in the market. The folks, like to be informed. Maybe we should have done this before the interview, but nevertheless, Dow futures down 130 points. S&P futures down 50 basis points. NASDAQ futures as well, down 50 basis points. Bonds getting the shit kicked out of them like the Denver Broncos. 30-year futures down 1.3% this morning. Oil literally flat, sitting right at $90 a barrel. Gold literally flat, sitting right here at 1945. Silver down 50 basis points. Copper down slightly. And then we've got the dollar slightly mixed up a little. Volatility index up a bunch today, and with interest rates up as well. Looks like interest rates are going to try to stick this move front and center for me. And that's what I got. And then one last thing, I was asked about the books recommended reading list. Spencer Israel, if you want to drop a link to my top 10 favorite books, which probably needs some updating, but that'll get you going. When you get through these, then email me and I'll send you what's next.
Yeah, I'll drop the link in the chat. Let's do some what's moving first, and then we'll bring on Kimmy. But we got some movers, got some news this morning. Okay.
Press is muted.
Oh, no, it's not.
Well, there you go.
Yeah, I got some news items too. Let's get into it.
Go for it.
Big news of the day, the old Sunday night news break. The writer's strike appears to be over. They've reached a deal with the studios / streamers. So you wake up this morning at 6 a.m., you look at your Paramount, you look at your Disney, you look at your WBD, all trading higher. I actually have looked at those in a couple hours. Let's take a look right now and see if they're still trading higher. Nope, Paramount giving it all back. WBD giving it all back.
What's WBD? Warner Brothers.
Yeah, giving it all back. Disney giving it all back. Anyway, this is big news of the day, and then the implication of this is, of course, if they can end one strike, they can end the other strike. That's, of course, the actors' strike. So, I guess good news on the Hollywood front. Steve, did you have thoughts on that?
I mean, yes, it is on the cover of the paper today. I don't know why. I don't really know how it impacts any of our lives, but
It doesn't. It doesn't.
What else?
This is interesting. Amazon is investing up to $4 billion in this company, Anthropic, which I will note has already raised $400 million from Google.
So this is
What do they do?
Though, with a B, right? So this is 10 times as much.
Yeah, it's 10 times as much. That's correct.
This is exactly what we talked about or have been talking about all year. Who are the winners of AI going to be? The people with the money. This is it. You're going to see a lot more of this from your Magnificent Seven. This is now their gameplay. This is their strategy for AI. Acquire, invest. They're not going to build these things themselves.
Well, Google seems to already be in the process of building it for quite some time, no?
The Baird.
The Baird?
Yeah. Baird is there.
Oh, but they've been working on stuff for a long time. Just because AI is hot now, all of a sudden, now it's in the now it's front and center. But right,
they probably have the best suite of AI things going on internally, but that wasn't cheap either.
My biggest takeaway is that AI is ridiculously expensive. Like, oh my gosh, like this company just raised $400 million from Google like 6 months ago. Now they're getting $4 billion from Amazon. It's a lot of money, man.
So what's this that ChatGPT can now chat aloud with you?
I don't know. I didn't hear that.
So
is that like the robot girlfriend?
No, like ChatGPT can speak back to you now like a human. I haven't tried it. I don't know. We're experimenting with some things internally, though. I'm excited to learn more.
Are you going to be at our meeting today at 10:45?
Yes, I am.
Ooh.
Is Louis staying up for it? Because he really wanted to be there.
I don't know.
Oh, man. He's still green. It's late. It's late in New Zealand. All right. Here are the news. The newsworthy.
Wait, I had one more thing. This is stock specific.
Go.
Friday night filing. You saw this one, Steve?
Buffett?
Yeah.
Yeah.
What do you buy?
He's selling HP.
Yeah, he sold about 4% of his HPQ stake. Sold about 4.7 million shares. So
listen, that chart looks dangerous. If that thing's below its .com bubble highs, you can't own it. That's a massive base.
Warren Buffett puking out the HPQ, huh?
Yeah, a little bit.
Listen. All right, so a couple things that stood out to me on the paper today. You're hearing a lot more about real estate problems, not just overseas, not just in China or Asia, but in the United States. Obviously, revolved around commercial real estate. But this weekend, a big piece about Atlanta and another one about San Francisco. Seems like things are maybe hitting a bit of a boiling point for commercial real estate. So that's going to be interesting. And when you look at REITs, I mean, real estate stocks on a relative basis, all-time lows. Can't find a sector that looks worse than real estate right now.
So this ETF, what is it? Desk? It just came out last week.
Oh God, really?
VanEck.
Nice one.
VanEck Office and Commercial REIT ETF.
Oh, I love it. Yes. Inject it into my veins.
Maybe they're onto something because this space has been decimated. Maybe this
this ETF has been decimated since it was issued on Thursday.
Yeah, maybe this will be one of those fund launches that actually came at the right time.
I love that theme.
This thing literally opened. This thing opened on Thursday. It's already down 10% in 2 days.
How did they launch this? How did they launch this in this market? I mean,
they're an ETF. They're an ETF company. They can do whatever they want. If they want to lose money launching ETF, they're free to do that.
Think about it. Like, how is there interest for this thing at all right now? I mean, Spencer,
we're going to find out, Steve. We're going to find out.
Scary thing.
No,
right?
There's no interest, Strazza, to your point. Literally, it launched and it's down 10%.
No, to Strazza's point, you have to have some interest to launch a fund. You can't just launch a fund with
do this. Like, oh, nobody's going to buy it. Let's just launch this anyway. There has to be some sort of support for it.
Well, clearly somebody who's making decisions there thought that somebody would care, but it's actually been the opposite. To your point, right. I'm saying, you're right. You're making a good point.
So I got more news for you. All right, Wall Street Journal was on fire this weekend. So let's go back. Listen to this one. Why are tech stocks down? Bond yields are up. Like that. Nailed it. And how about this? Wall Street is hoping $100 oil ain't what it used to be. Will surging prices derail the Fed's soft landing? It is complicated. Spencer, can you throw up that slide? I got a little chart here. This is exactly what I'm talking about. I love to see that the journal is already reporting on it. There's something going on here where the market is going to have to adjust its expectations for the direction of interest rates into next year if oil and gasoline prices are going to rally like this. So there it is, right there on the left. And if you read here, oil's rise has inspired fresh fears from Washington to Wall Street that energy, which the Fed largely excludes in its policy calculus, could throw off central bankers' attempted soft landing. So this is a quote from Rob Kaplan. It makes things harder, former president of the Dallas Fed. Just because the agencies or analysts or economists X out oil, the middle-class family doesn't get to exit out. What is the most recognizable thing for the average American, right, in terms of how they measure or gauge inflation? It's how much it costs to fill up their tank.
That's right.
In the grocery store.
Fine. And the Fed is looking at inflation, or supposedly looking at inflation X food and energy. They can't, because those are the ones that matter the most. So when you increase,
it's a great point.
Food and energy, if we're really going to enter a new leg higher for commodity prices, broadly speaking, Fed's going to have no choice but to keep hiking to tame inflation.
In other words, if you take out the things that we actually need to live, inflation's looking not that bad.
Right.
Yeah.
And then here's the thing. I mean, just think about how much pain it will cause civilians in general and investors, right? Both non-professional investors and investors. Non-professional investors that don't have energy exposure or exposure to these food companies and stuff like that. They're paying more. Life is more expensive. Yeah. And then the professionals that are actually managing money, you know, or who are invested, there's no, you know, NASDAQ has 0% energy. You know, the S&P 500 is 4% energy. You know, whether you're investing, you're not in these things. And if you're just a civilian, you're not so much an investor, you're getting killed in these things. So honestly, I like the bet on the pain trade. What's going to hurt the people the most? I think that's what we continue to invest in. You invest in the pain trade while others are suffering. Somebody's got a profit. Might as well be us.
All right. Kimmy's here. Let's bring Kimmy on real fast before she has to go to her room. I didn't mean her room, her trading room.
I like how I said, oh, Kimmy, go to your room.
Go to your room. No.
Kimmy.
Morning, guys.
Kimmy, I didn't mean go to your room. You know what I meant.
I know.
Well, I love how, like, you know, the things that people must think, because Spencer's like, listen, if you'd like to join Kimmy in her room, you know, Kimmy, go, you know, like there's so many, you got to really be careful around here. You know, people are going to get the wrong idea of what the show's all about.
All right. Anyway, Kimmy, 3 for 3 on Friday. John Deere, Adobe, and Spy. Talk us through one of those.
Yeah, I just bought some of the gap downs Friday. Nice little gap down. Bought some of those, and then after that, after 3 trades, I said it's Friday. That's it. Let's move along. That's all I did on Friday, and I just called it a day. You know, little bottom fish in there. Trying to see if I could dabble this morning in some names. Not much is interested in me. I mean, charts are broken. Things don't look great. Looking maybe for dead cat bounces. So we'll see what goes on.
Yeah,
today.
I saw PayPal get a shout out.
Yeah, we'll see. I mean, that name doesn't move all that great at all. I was just looking at, I literally threw something in there to see, because I really didn't have much to talk about.
that chart is
wow. Listen, it's me taking a shot, right? I could watch Netflix around this 380 area, but it could push lower. 380, yes. It could push a little lower from here. I just have to really see what goes on. I did dabble in the SPYs and the IWMs this morning. They are going against me. We'll see if they pop at all. just seeing for dead cat bounces. I'm not buying big. You know, we got to still let it flush. I mean, listen, we could go to 39.50 on the S&P, which, you know, I've been saying, I think lower near term versus, you know, what goes on, you know, but we're coming towards the end of September. It usually takes for the market to start to turn around really. You know, I think, you know, the first 2 weeks of October, usually, you know, you start to get the turn or whatever. Oh, Joe, thanks. You're sweet.
When you go back and we're going to take a look at this chart when Kimmy steps away, but just to kind of give a little foreshadowing there, this is the week, if you take and look at the last 10 pre-election years, going back quite some time, my whole life for that matter, this week is the low from a seasonal perspective. So, you know, whatever that means to you.
You know what they say? What they say? What is it? Sell Rosh Hashanah by Yom Kippur. Yom Kippur is over.
Yom Kippur is not over.
Not over yet.
We're in the thick of it, Kimmy. We're in it.
Spencer over here is starving, man. The
I'm
guy's
hungry,
dying
Kimmy.
for a donut over here. This guy. When can you eat? Sunset, you eat, right?
Tonight.
Yeah, my family eats a little earlier, but yeah. Sunset is generally how we do it.
Sunset, right? Otherwise, go get your bagels.
Right,
no, but Kimmy, I like what you were saying before about, you know, you're waiting for that flush, you're waiting for that washout. We haven't seen it.
Right? You know, it's been, even in August, it's like torture. It's been like a stair step. You know how you get the stair step higher? You know, it's a stair step lower, and it's just, you know, it's annoying. I'd rather flush, you know, just to get it over with. But, you know, it doesn't always work that way. So,
yeah, no. And I think a lot of people are looking for that. And I think that's maybe one of the reasons we don't get it. The market's not here to give you what you want. The market's here to frustrate the most amount of participants at any given time.
That's why even shorts have been hard, because it's like, they go lower and then they bounce. They go lower and they bounce. That's why I say right now to everyone in general, it's a very hard trading environment. You know, wait for, not saying, you know, you can never necessarily catch the bottom or the top in anything in life, right? But, you know, kind of like, you know, let the market settle. Let's get it more comfortable. Let's get a better feel for it, you know, because you can have a whole nother leg lower here, and you just have to be careful. I tell people, if you're going to trade, I trade a lot smaller, right? Because we just don't know, right, what goes on.
This is a sideways, messy environment. Incorporating strategies that are good for these types of markets is what we are doing, right? This is not a trending environment. This isn't April, you know, this isn't January. It's very, very different.
Right.
You know, take what the market gives you. Play the cards that you're dealt, not the cards you wish you had.
Right, exactly.
All right, if you want to check out Kimmy's trading room, the link is in the chat and description. Go find her there. Kimmy, go get him as always. Have a good one.
Yes, and hi, Rachel. She's so cute. Bye, guys.
I want to show that chart, slide 1 here, that we were just talking about with Kimmy. This one coming from our good friend Ari Wald, Chief Market Technician at Oppenheimer, who is going to be a guest on a Chart Summit this week. So this is a chart from Ari over the weekend, showing the last 10 pre-election years on average. This is the week, Friday in particular, is the day that from a seasonal perspective, things are the worst. And then things get better as we head into October. So just something I want to show. This chart mean anything to you, or not, you don't care, Strazza?
Aware of it.
That's enough, right? Like, okay, great. We kind of knew. You know, if you include all years, it's maybe somewhere in the middle of October as opposed to the end of September, but kind of about the same. Not going to change our lives.
When we first started talking about the weak seasonals that really began this summer, right, and showing those analogs, I was giving presentations all over Asia. I remember I kept saying, so sideways for maybe a quarter or two, but into the end of the year, you know, come winter time, we tend to get a ramp higher. Maybe it happens, maybe not. I think we still have another month or two of sideways, though, based on a lot of the analogs. The stronger period doesn't begin until like literally December, I'm pretty sure.
No, it's earlier.
November?
October.
Really? All right.
Yeah, you buy the weakness into October. I mean, I'm not I'm not saying that this is what we should do, but if you're looking at seasonals historically, this pre-election, last 10 pre-election years is an interesting chart. Ari put out because it suggests that the strength should start a little bit earlier. But when you zoom out and you include a lot of years, kind of generally speaking, you buy the weakness in October, right? Like Jeff Hirsch says, you buy in October, get yourself sober.
When you look at just
mid-October,
the full data set back to the 1950s, right? It straight and then ramps up in October. Okay.
Yeah, and the 1950s is kind of a good place to start with the seasonals because that's when America shifted from a majority, look at my fundamentals, majority farming economy to like today, farming's irrelevant.
It was manufacturing to services. Yeah.
No, farming.
No.
Before 1950, it was a ton of farming, not manufacturing, farming.
Okay.
Yeah. And then now farming's irrelevant. Like it represents what? Less than 1% of GDP? Look at me. Come on. Look at me.
Hey, you know what else is in mid-October? Earnings season. I'm just saying.
I was going to say baseball playoffs.
Earnings season. No.
These companies earn money?
Yeah, that's right.
Is it a lack of earnings season? Is that more?
All right. Do we have anything for the Strazza spotlight today, or did we already do it, Steve? I don't even know.
I already did it. I would just talk more about crude oil, which I don't think we need to.
All right. Cool.
Why not?
You want me to go?
Yeah. Hit the bumper, Spencer.
Yeah. We have this beautiful bumper for Steve. Oh, no. I lost my background. This beautiful bumper that we made for Steve. So I might as well use it, right?
That's a good bumper. Pretty sweet.
Check out these massive bases. Throw up chart 11. Just same theme here. Just drop it in one more. Hold on. Okay.
So those are your heating oil futures back at those former highs. Yeah.
Heating oil was kind of leading, right? But you see the giant base there. If that thing hooks higher, call it like 3.25. Look out. And I find it hard to believe that something like crude oil and then the other distillate, gasoline, won't follow, right? So if you look at crude on the next chart, when you zoom way out, you got those pre-financial crisis highs, and I think we're headed back there because we're already back above those 2018 highs, right? So you got the little shorter term reversal pattern. This thing runs back up to make a trend line there. You could draw a more horizontal line. Either way, it's going back to the upper bounds. If it goes, look out. And then gasoline is the next one. Gasoline is not going to look differently. Next chart is gasoline. Yeah, gasoline is not going to look differently. No. 13. Chart 13. Yeah, so gasoline still hasn't completed this shorter term reversal pattern like crude and heating oil have. They're all going to go in the same direction, right? So I think it's only a matter of time until it does if crude and heating oil keep working in the direction they're working in. And then you have these giant bases in all three. And again, think about what that means for inflation, what higher inflation, higher rates would mean for the broader stock market. And then what does that mean for certain stocks, right? Like the big base that we talk about in large cap energy. So maybe we're going back to a place where we are really going to be leaning on energy big time like we were in 2021, 2022.
I hope it rips. I'm long Chevron. Let's go, baby. I'm in. Let the rest of the world crash. Not my problem. If energy's doing well, I'm winning.
I could talk FIC with the best of them, G. Diaz. I just like
Yeah. Spencer, why don't you tell the folks about what we're doing tomorrow afternoon?
I could. I was going to save that for recess, but
give it to him now.
Hold on. One more thing on that, JC. Energy futures have been doing this in an environment where the dollar has been relentless.
Yeah.
Higher for like 10 straight weeks. What happens to crude oil and gasoline, heating oil, if and when the dollar rolls over, if they're ripping now? So I think things are just looking better and better and better for crude oil and friends.
I don't know. If the dollar's getting smoked, are you not getting rotation into tech and energy's underperforming in that environment?
I just find it hard to believe that the trend isn't persisting at the very least.
I don't know. I don't think it's that simple. I don't think it's that simple. I guess we'll see. Listen, it's not that clean, but I'm very curious.
Are you going to tell me that if crude oil is rising with a rising dollar, that if and when the dollar were to stop rising, crude oil wouldn't keep rising? Come on.
I don't know. I honestly, I don't know, because if the dollar falls apart, I think you're going to get rotation into other risk assets, and I think money's going to come out of energy. So I don't know if it's that clean. I don't think it's that clean.
Dollar's been so strong.
It has. It has. Why aren't precious metals doing worse?
Energy.
I was like, didn't I tell you I am not thinking about precious metals, JC? Jesus Christ.
But in all seriousness, right now, energy, those are the contracts I think that are most interesting and have the most opportunity. Agriculture's been working, right? There have been bullish opportunities there. We've been writing about it all summer, even through the spring. Precious metals are dead. Base metals are dead. Energy's waking up, though. I think that's where the alpha is in the commodity complex into the end of the year and next year.
All right, Spencer, give me my theme music. Boom, boom, boom.
Oh yeah, the bumper. Oh wait, where is the bumper? I sent it to you over the weekend, so I know we have
Chart
it.
Summit bumper?
Yeah.
Why don't you just play the trailer? You don't have the trailer?
No, do I have?
I was doing my Deion Sanders impression.
No. Do I have the trailer?
Oh, that would have been so good.
I know. Hold on.
Yeah,
You're killing me, Smalls.
Where is my trailer? Do I have it? Yeah, I got it. Oh, I got it. Okay, I wasn't sure if I had it, but I had it.
Give me my theme music.
Time for the 2023 Chart Summit. Mark your calendars and sign up now. The event is on September 26th and the 27th. This year's Chart Summit will bring the best in technical analysis straight into your living room or home office. Either way, this year's guests are JC Parets, Steve Strazza, Kimmy Sokoloff, Patrick Dunawilla, Ian Cully, Ari Wald, Melton Demirs, Brian Shannon, Christian Tharp, Frank Capillari, Jeff Hirsch, John Netto, Kenny Glick, Ryan Dietrich, Joe Fahmy, Willie Delwich, and Tyler Wood. Join us on day 1 for a virtual happy hour with traders and on day 2 for a full day of education. Go to chartsummit.com to register for free today.
Hey now.
Guys.
In the time that trailer was made to this morning, the speaker list has expanded exponentially. We're up to 25 confirmed speakers for the next 2 days, for tomorrow and Wednesday. 25 speakers. So if you don't know what we're talking about, there's a link. It is pinned to the top of the chat. There's also a link at the top of our description on YouTube. There's also a link on the screen right now via QR code. Sign up for the Chart Summit. It is free, but you got to register. And we are not doing any of our shows on Wednesday. We are just doing this one-day special event. You will, of course, have access to the replay. If you can't make it live, that's okay. This is the internet. We can do things like that. So there it is. There's the code. Check it out. Link everywhere on screen, in chat, in description. Full speaker list going out today. Like I said, 25 speakers, and dare I say, possibly growing at this point. I don't even know if I can say that, but I'm saying it anyway. So schedule was jam-packed, like literally jam-packed, from 4:30 on Tuesday going to, like, I don't know, 6:30 or 7, depending on how we feel. And then all day Wednesday, like 9 to 6, I think. Like, just insane.
8:30 to 5:30, but that was close enough.
Whatever.
Strazza, who are you looking forward to the most?
You always ask me these stupid questions.
What's stupid about this question? It's a legit question. I'll tell you what I'm looking forward to.
I'll give Steve time to think about that. NASDAQ Poppy, this is a virtual event. So, yes, we're all going to be there virtually.
We are. By the way, May, Napa Valley,
okay.
Not virtual.
Okay, not confirmed. Confirmed.
It's confirmed because I make the rules around here.
Probably most excited about Ari or Dietrich. Probably Ari. Don't really get to see him present too often. I would say Brian, but I watch his videos every week. I know what he's going to say. So it'll be nice to see Ari for sure. I'm excited for the breath panel that you and I are going to do. Really, me, you, Early and Thrasher. That's going to make sure.
Yes, a few years ago, I think like 3.5 years ago, we did a happy hour with traders. Me, Strazza, and it was Mike Hurley and also Andrew Thrasher talking about market breadth. Very timely at the time in hindsight. It was February of 2020.
We had a lot of fun with that, and it was a great discussion. I'm going to go back and watch it.
So we're running it back. Are you going to go back and watch it? Send me your notes.
Yeah, I'm definitely going to go back and watch it. Dude,
Nice.
that's like you said, it's been a long time now.
It's
Do you remember?
been a long time. We're running it back.
But I mean, 2020 was the year of the breath thrust. It really was. The thrusts we got off those COVID lows were just epic.
Yeah.
So,
yeah, that's going to be a blast. I'm looking forward to Joe Fahmy, actually.
You know,
Joe Fahmy, I feel like I never see Fahmy. You talk about Ari Wald, agreed. We rarely ever see him. But Fahmy, I never see him. I used to hang out with Fahmy all the time. I actually was on TV with Fahmy a few times on an old school TV.
Yeah.
So nice to have him here. You know, he's at the office. He's not in Las Vegas or in Miami or in, you know, or at a concert. He goes to a lot of concerts, this Fahmy guy. He went to like 5 concerts in 7 days.
Well, Joe Fahmy hangs out with rock stars.
Joe Fahmy hangs out with rock stars.
All right, guys.
He doesn't have time for us peasants.
Check this out. So I missed a press release that we got to mention. MicroStrategy.
Oh yeah, so
Here we go.
I was wondering if you were going to bring this up.
How much?
Good for them. Good for these guys. MicroStrategy buys another 150 million, 147 million in Bitcoin from August 1st to September 24th.
But how much is that? What does that bring their total to?
Come on. Why do you do this? You know, I don't know that. I would have to.
Know? I think he's got like it's like 5 billion, isn't it?
Yeah, but he's slowly accumulating. I don't know exactly what it is yet.
I think it's like 5 billion last I checked.
It's all there. You could pop open their most recent filing. But the point is, they're not stopping. Like, their strategy is clear. Their micro strategy is clear.
4.7, Strazza. 4.7. And they just got 150 million more.
It's going to keep going. They don't care. They're just long-term holders. I love it. I really love it.
At this point, what the fuck's the difference? Right? Like, you got so much. Like, you might as well go. I know you've gone too far. Right? What are they going to do? Start unwinding their position? Like, if you're in, you're in. Issue another secondary. Buy some more. What the hell's the difference?
I appreciate the consistency. You know, they made it clear that this is what they're going to do, but they're just still doing it, and they're not stopping. And there's no problems with them blowing up on a loan or some shit like this. They're fine. It's a leveraged Bitcoin ETF, and frankly, I love it. I think it's a great vehicle. Good for Michael Saylor. Good for Mike. However this ends, good for Michael Saylor.
Listen, there's going to be case studies about this. This guy is going to either go down as the worst of all time or a crazy genius. And we will be able to say we were there commenting, trading it, watching in real time. But I don't know how it's going to work out. I mean, I guess I'm rooting for him. I'm not hating. I'm rooting for him.
But they truly have kind of managed this, like from a financing perspective, masterfully, right? With the interest rate environment and, you know, what it's like to get capital right now. They're leveraged, they have loans, and they did it in a responsible enough way. They're not blowing up at all. They're just fine. So, you know, I appreciate kind of the financial savvy from Saylor and whoever's, you know, running this thing, because it's not simple, especially with a volatile asset like Bitcoin. That's it.
Yeah, I mean, listen, I don't know, man. Good for him. Again, like I said, I'm not hating. I'm rooting for him. I would love to go, 10 years from now, be like, that Michael Saylor guy, he seemed crazy at the time, but he was right all along. Like, that would be cool. I'd rather be saying that than, remember that crazy guy, Michael Saylor, that lost billions of dollars? Like, I don't necessarily want to say that.
So listen, I just pulled it up. They're in the money right now. So MicroStrategy, together with its subsidiaries, held an aggregate of approximately 158,000 and some Bitcoins, which were acquired at an aggregate purchase price of approximately 4.68 billion. So that's the cost. And an average purchase price of approximately 29,500.
So they're
not quite in the money. They're just out of the money, but like
they're just out of the money.
You get
about $1 billion in the red ish.
You get that breakout through 30. This thing's going to 60. That's a double quick. Wait till you see what MicroStrategy stock is doing then.
Yeah, no, it's about $500 million. They're $500 million in the red. So that's what, about 5 years of earnings?
They're all right. They're going to be all right. It's really interesting to kind of follow what they're doing here. Coinbase also, since we're on the crypto news right now, this is never good. Send and receives are currently delayed on the base network. Our teams are working on a fix. You can't have that. Trust and security and ease of operations, getting your money in and out is the most important thing for a broker or an exchange. Once you lose that trust, you lose customers and they never come back. So stock's not moving too much on this news, but it's unlike Coinbase. So hopefully they figure it out fast.
Speaking of which, are you buying this? I've been watching, these miners get absolute shit kicked at them. These things got cut in half in a couple of months. Look at Mara back down to those May, June lows. Do they catch a bid here today, or does the crash continue?
Listen, maybe. I'm not trading these names right now, right?
Flat 200-day moving average. Stock's getting oversold.
No.
Everything says to stay away.
They were great trading opportunities.
Still are.
Spring, early summer. It's just that the charts look a lot different right now. Like you said, a 50% drawdown or more will do that to you. Look, go to the names that are just firing on all cylinders right now through this volatility. Dude, look at these uranium stocks again today. I mean, it's just, they're up every single day. Like a big red candle last week, no follow through, right back. Just uranium is the place to be right now. Did you read that article about the beauty queen from Wisconsin or whatever, who's like touring the world and talking about like the positives of nuclear energy? She's a nuclear scientist. She's like the new, what's that girl who does the climate stuff and cries?
Oh my God.
The one who pretends to get arrested. Like the poor little girl, let her live.
What's her name? Okay, we all know who you're talking about. Whatever, we all know who you're talking about.
She pretends to get arrested in random countries. Like, what's wrong with this poor little girl? Like, go play with dolls or something.
The point is, we've talked about on here
Greta,
before.
thank you, GR.
Greta. No. So we've talked about how the narrative is changing for nuclear and for these alternative energy industries, right? So now there's like a spokesperson for nuclear who's going out to all these conferences I was reading about.
And she's a beauty queen?
Yeah, she was a former beauty queen. Look it up.
Greta, not a beauty queen.
That's not nice.
All right. Okay, come on, dude. She's like 13. Come on, JC. Okay. Hot corner.
Let her play. Like, poor little
all right.
girl.
Let's do hot corner and then let's bring on Sean.
All right.
Hot corner. So hot right now.
A lot of names today. A lot of stuff to talk about. Throw up my table.
Yeah, what's up with this Star Surgical Company? Star spelled with 2 A's. I love it when they do that.
Yeah. So listen, there's some ones that we don't want to buy, which are the non-piker purchases in JC's language. So the top 2, big buys. So let's start with STAA, like 11 million here from Broadwood Partners.
Throw up slide 1.
Give me a sec.
All the charts are right after the table. I don't think it's slide 1.
Yeah, slide 1 is not after the table.
It's 20. Okay. What's going on?
Whatever.
Yeah, you zoomed way out. This thing doesn't look good. You zoom in, it doesn't look good. Why? See, what are you doing that for? You're hijacking my segment here with your charts.
My chart's better than yours.
No, it's not. Go to my chart.
All right.
Like what? So what, you want to buy it when it's back at under 20? We're at 40 today. How does this?
I don't want to do anything. It's just a chart on the hot corner from this morning. I don't know what to tell you. I'm not going to do anything here.
This is what it really looks like when you zoom in. This is
a good chart. It's a good chart.
It's trash.
Second best Star Surgical chart on the whole deck.
All right. Now, the next one is ChargePoint. And Spencer, maybe you could help me out. This was one of those hot stocks, came public at the right time.
I remember this guy.
This was a big SPAC daddy. And knowing nothing about it, here's the question I would ask if I had to throw my fundamental hat on. These guys are supposed to be outfitting the entire country with EV charging stations, from what I believe. Okay, so they compete with Tesla?
Correct. Yep.
I'm surprised it's not a zero yet. That's not a business you want to be in. So these guys are trying to compete with Tesla for putting charging stations all around the country. If you pay attention to the news, Tesla is making deals with all the largest auto companies, and they're partnering up, and it seems like they are really going to win this space.
Well, they compete with Tesla and they work with Tesla. It's kind of confusing because we don't have a ubiquitous charging network because it doesn't exist yet, right? They're building it now. There's all these different networks that you can charge on. Tesla has one, ChargePoint has one, and they sort of work with each other. They let you charge your Teslas at charge points and vice versa. You know what I mean? But
If they're working with Tesla, all I would say is that they got a bad deal then. Okay. Because the stock shouldn't look like this. Can't imagine the cash burn on this company. So anyway, you can't own it. CHPT, ChargePoint, ugly SPAC here. Now let's look at some charts that we like. You want to do Hyatt? So these are all small purchases. Look at Blackstone. I love this. The asset managers are really starting to look good, whether it's KKR, Blackstone, I think Carlyle. So I like this one. Base is complete here. Use those August highs, about 110, back to the all-time highs around 150. Yeah, 35%. Not bad. I like this trade.
Can we throw my Blackstone chart?
Why? That's not what this is about. It's not what this is
next,
what's about.
Next. Wait, this one.
Hold on. Can we just show this? I think you'll appreciate it, Strazza. Seriously.
All right.
Listen, I'm not just hating.
All right, what
This
side
is a
is
good
it?
one. It's not my fault that my chart's better than yours. I just think this adds to your point.
Slide is it? One?
No?
I got some
Slide
color
one.
again.
Slide one.
I got tan. You know what I found? I was cleaning my house out. I found some of those old All-Star Charts golf balls this week, and I was so excited. A whole box.
Nice. You haven't hit them all into the water yet.
They're actually all gone because I gave 2 sleeves away to my buddies.
Gave away.
Yeah, I give them to them. They could lose them out there on the course. It's great marketing.
You don't think this is a dope chart?
Yeah, dude, it's a strong stock. It's been a strong stock. When you zoom out, it's clear. This is one that you wouldn't mind owning long term, and I think this is a good.
It's right in the middle. It's right in the middle of this range. I think probably heads back up to those former highs. This is a space, capital markets in general. This has been a space that money's been flowing into. Looks better than a lot of other places. That's for damn sure.
Yeah, but don't you want to? So this is great, right? This is the structural picture, right? Strong stock, been a strong stock for decades. But then don't you want to zoom in and use more tactical levels? Like what's wrong with those August highs at 110?
Nothing. You already did that.
Okay, all right. So
yeah, nothing's wrong with it. You nailed it. But this sort of adds, now that there's more wind at your back, right? The longer term really points to, yes, this is messy short term with a bullish bias, but this is part of why you want a bullish bias, no?
Absolutely. Always good. And if you look at the trend, it would be strong too, long term. Can we check out this biotech now? Not eBay, but CBay. It's actually like $1.5, $2 billion, I think. Not tiny. It's been a wild ride if you've been holding this stock. 15 to 1, back to 15. But this is a big base. It's a big base. If you zoom out, just post IPO, you have a high here too. I think this 15 level is one you could trade against, but this is a buy on strength only setup right now because it does have the failed breakout setting up, right? If you don't get that move above 15, you probably want to look out because you're back in the box. Who knows where this thing's going?
RA Capital Management stepping in, filing a 13G, meaning that they're perfectly okay with what the company's doing. They just want to be shareholders, kind of sit tight, keep your mouth shut, and just make money. So I appreciate that.
Let's do Hyatt now. Let's do Hyatt quick.
Must we?
Yeah.
I mean, just think about it. This Richard Tuttle, $130,000, Mr. Tuttle? That's all you got?
I would zoom in on this one, and we talked about it last week. Look at that short-term top. If that fails, trade it back, go into that first Fibonacci. This is a strong one. All of these major hotel chains, they're strong and steady stocks, quality businesses. They're the kind of names that you want to just look to get in and own long term. I like these hotel stocks. Hilton.
I don't know, about $100,000.
But it's a strong stock. Strong stock. If you zoom out, you'll see it even more clearly. I think we had an options name too. I was going to talk about.
Oh yeah, I'm sorry. Yeah, we did. Yeah, well, ironically, the other HP, right?
Yeah.
This one looks better these days. HPE. Yeah.
The Enterprise, because this is the Enterprise one. This is the software.
On strength only. You want to see the relative trend go. Yeah, this is the cloud. Enterprise.
They're not selling fax machines.
No,
they're not.
That's why Buffett owns the other one.
Hating on Uncle Warren.
He's a hardware guy. But yeah, if that base looks good, use the relative trend for confirmation. You should get that little reversal pattern breakout there. Some good stuff today on the list.
All right, let's bring Sean on and talk some options real fast, and then we'll do some recess, and should be fun. Where is Sean? Here he is.
What's
Shawnee,
up, fellas?
baby.
Yo.
Hey, shout out having my boy Jason Leavitt on this morning. Great friend of mine here in Colorado. He comes to my trader meetups. One of the smartest guys that comes to our meetups. Glad he showed up on your radar because he's a gem.
Yeah.
Listen, he agreed with everything I had to say, so sounds like a smart guy.
He could come back.
Also, you guys touched upon a huge Cubs fan. His brother, by the way, in the 2016 World Series, when the Cubs won the World Series, in Game 7, that legendary game, played on a Wednesday in Cleveland, as all Cubs fans know, his brother caught a home run ball. He was the guy, you probably don't remember it, but there was a home run where there was a guy running across like the outfield wall to grab the home run ball. That was Jason's brother.
Wow. That's awesome.
I love that you know that.
That's awesome.
Hey, man, it was a special time for Cubs fans.
Let me tell you something, Shawnee, baby. I love, boy, do I love when you talk uranium to me,
Yes.
When you come to me talking uranium, it really gets my mojo going. And last week, Shawnee, baby, stepping in.
Yeah.
No bull call spread, no risk reversal. Just shut the hell up and buy the calls going out to February. Let's go.
Well, hey, look, last week, the attitude that I had was that I wanted to start dipping my toes into some long exposure, and Next Gen Energy looked like a good candidate. Now, it continues to look like a good candidate, and I'm very happy with how this is playing out so far. It's early innings, right? But I'm liking the way it's playing out. But since we've had that discussion last week, I'm back in the sideways for longer camp, JC. The way the markets reacted post-Fed for whatever reason, who cares why? But I don't like the way the market's reacting, and so I hate to be a broken record, but I'm still looking for premium to sell delta neutral here.
But Shawnee, baby, you think the market continues to prove that uranium doesn't care about your sideways for longer? Like the uranium's going to do whatever it wants to do.
You're talking about most stocks, Sean, but these uranium stocks, they haven't cared throughout this whole volatility the past few months now.
Oh, I'm not complaining that that's where we chose to get some long exposure. It's working out great. But my point is that this week, I probably will not be looking for more directional bets. I already have my uranium exposure, so I'm good there. I'm probably going to be looking for sideways action. Now, here's the challenge that we have. Now that it is September 25th, we are on the cusp of earnings season, as you guys know. This is Spencer's favorite time of the year. And that makes it challenging to be selling delta neutral premium as an options trader. So I will probably be looking more at sector ETF levels to be doing delta neutral trades so that I could minimize any gap risk that might be on the deck with earnings. So that's where my head's at as we come into this week, guys.
All right.
Can we talk more about uranium?
I just shut you guys down. You had nothing to say to that. Wow.
I'll just keep talking about uranium because I feel like being bullish this morning. Throw up the first chart. So we got into NXE last week, looking for a breakout. Looks like it's going to go. These things are back to trading.
You want to walk through the details of that trade quickly, Sean?
Do we have an NXE chart?
Yeah.
All right.
My NXE chart. I just put it up, didn't I? Or I didn't. Yeah. Slide 5.
I was charting.
Oh,
sorry.
All right, so NXE, we went out into February options. Why did we go February? Well, for no other reason than we only had October and November to choose from before February. And October was obviously way too short. I'm much more of a longer term swing trader than that. There's only 25 days of expiration in October. November, too short also. This was a move that we were positioning for, a big move, and we want to be exposed for a long time. And most importantly, options premiums were relatively tame, not as tame as I'd like them to be. They've actually picked up since we got into this position, which is nice. We were able to buy these calls. We paid 60 cents for them. We bought these 7 strike in February, paid 60 cents for them. And I went out to February because I can afford to do so because the options were relatively cheap. And more to the point, guys, I don't know if we touched upon this when we talked about it last week, but if this thing gets going, it's not going to $7. It's not going to $8. This thing could go to $20. I mean,
yep.
That's not the bet I'm making, but it's a reality. It could happen. It's a very strong possibility. And a 7 strike call in an environment where the stock runs up to $20, we're talking some serious leveraged gains in a move like that.
That's called in the money, paid in full.
If I ever start a polka cover band, it'll be called In the Money.
Dude, these are such high beta, juicy names. Can we talk about some other ones? NXE is like the leader, so it's already back at those old highs. There are some that are just completing bases now. I just dropped 2 charts in after NXE. This is Energy Fuels, UUUU, and then Dennis.
That is 4 U's.
So UUUU, vanadium. Don't ask me what it is, but these guys do it, and it's exciting stuff. So,
sounds like a Canadian scam.
Vanadium plus uranium. I mean, what more do you want in a commodity stock? Look at this thing go. This thing's up like 6% here this morning. And then check out Denison, even cleaner.
Denison Mines.
You got the base. It's going. Then you got a little throwback, a retest of that base. I could also zoom out on something like DNN and draw a perfect failed top, which is how I had next gen drawn when I got into that trade. This is doing the same thing right here. This would mark basically the right shoulder where I have the red arrows drawn. So that's your entry point, trade it back to the highs. I mean, Sean will laugh and say, just buy the stock. This is a call option. Yeah, just buy the common. It's $1.50.
Strazza, you've been so bullish on uranium for a while now. I mean, are they about to to build a new plant there on Stock Island? What's going on?
I wish they would. No,
dude, they don't let you build shit down there in the Keys. Are you kidding me?
Dude, they won't build a Walmart here.
They won't let you build a house, yet alone a nuclear power plant.
God forbid you bump into a coral reef down here. I mean,
ooh, that would be terrible.
Yeah, no. If you hit one of these key deer, you're in jail for life.
Saw one yesterday, JC. Saw one.
Did you?
I was up there.
I don't think I've ever seen one. I just seen a sign saying if you hit one, you're going to jail for life.
They're so cute, like a couple keys. It was tiny, right on the side of the road. Yeah.
Sea deer, is that the same thing, or key deer? Is that the same thing as the sea cows? What do they call those? The manatees?
Manatees. No, they're even more endangered, the key deer, than the manatees.
They're literally sad. They're literally on like 2 little islands down here, and that's it. But they're so cool. They're tiny, and they swim.
I was on a hike this weekend. I came across a bighorn sheep. Just throwing that out there.
Awesome.
That's cool. All right, should we do some recess?
Yeah.
Yes.
All right.
Hit it.
Listen, T Money just to take a comment from the chat quick. T Money just threw out URNM, which is a uranium ETF. Listen, URNM, URA, those are the popular ones. But the strongest one has been NLR. I know JC is going to say, oh, but you can't trade it. NLR, Van Eck Uranium Nuclear. Look at that thing.
Yeah, it doesn't trade.
Whatever.
All right.
No, I know, but like this is one of those things like for informational purposes. I just threw on my Miami Dolphins hat just to remind everybody who the best team in the league is.
All right, so let's do that. JC, question for you. Should they have kicked a field goal and broke the record?
No.
Absolutely.
No,
yes.
Because they're not in
Why?
the business of breaking records. They're in the business of winning Super Bowls.
They
went into the game with one mission, and that is to win the game, keep everybody healthy, and get the hell out of there so we can move on to next week and kick some ass up in Buffalo.
Yeah.
So 10 times out of 10. Like, I think you said it. 10 times out of 10, you kneel. That's what he did. No big deal.
Yeah, I wouldn't have said anything if they decided to kick. They deserved it. That was such an impressive.
You might not have, but you know that all these other yahoos would be yapping all about it. Like, it's not worth it. For what? It's a distraction.
They made their point. They didn't need to. You're absolutely right. I think back to, I was at the Giants game. It was the last game of the season, and Michael Strahan needed 1 sack to break. I think it was like Gastineau's record back then, that Jets guy who had 1 good year. So anyway, he was going to break the single season sack record, and he was close a couple times, and Favre wasn't letting him have it. He kept getting rid of the ball. And then it was the last drive of the game, and you saw him talk to Strahan before the snap, and Favre just rolls right out and slides, and Strahan gets the sack and breaks the record. And it didn't feel good. You know, you're like, that's not really the record. But yeah, that just reminded me of that moment.
Well, look, it was a tough weekend here in Colorado between the Broncos throwing out their high school defense and the Colorado Buffaloes just getting steamrolled. It was a tough weekend for Colorado football fans, but I can't wait to see the Miami Dolphins offense versus the Buffalo Bills defense next weekend. That is the show to watch for all of football. I can't wait.
I got to say, after this weekend, I think the Bills are going to get whooped. I don't know how they're still favored in Vegas. And that's amazing.
How are Miami 2.5-point dogs?
I don't understand that, dude. That's going to shrink.
So, you know what? You want to hear a little bit of a bummer? So my sister, she married a Jewish fellow and had a baby. And on Sunday is having the baby naming thing in the middle of the Dolphins-Buffalo game.
Oh, God.
That's bad juju.
Like, what the hell? So it starts at 3. So this is right. You know, I'm thinking like by then Tua will already be benched and we'll have our 3rd string quarterback in or something like that. So it's not going to be a big deal. So that's what I'm thinking.
You know, her husband's a Patriots fan, right? So of course they did that. That was deliberate, JC. I would take issue with that.
Dude, this is ridiculous.
Who won the Patriots game yesterday?
The Patriots did, but nobody won. There was 2 losers in that game.
The who gives a fuck game of the week? Nobody was watching.
Hold on. I have a trade of the week. Okay, this is Spencer's trade of the week, and the trade is relevant all the way up until next Sunday. Okay, so Sunday at 8 p.m., the Chiefs are playing the New York Jets, the New York Football Jets, in New Jersey. Okay, at the Meadowlands. Right now, you can get so many tickets in the upper level for $112 each. Okay, tickets are cheap. All right. Now, you might think, why would I want to go to see the Chiefs play the Jets? Maybe you want to go to Joe Klecko's celebration night. Maybe you, because
you're a Swiftie. That's why you're a Swiftie.
Maybe you want to see Travis Kelce and Patrick Mahomes. No, you don't. You don't want to see any of that crap. You want to see Taylor Swift. This is my trade of the week. Okay, you buy the Jets tickets now, and you wait for the Swifties to realize what's happening. Oh wait, Taylor Swift lives in New York. Oh wait, her boyfriend's going to be in New Jersey on Sunday. You think she's going to the game? I want to see her. Buy these tickets now. Sell them on Friday. Profit. You're welcome.
I'm a Swiftie. I'm a big Taylor Swift fan. I like T Swift a ton. She's gangster. I like T Swift.
Look, the only chance you're going to have to even see Taylor Swift is if they happen to show her on the scoreboard during the game, which you could get same thrill sitting on your couch at home. Why spend the money?
Hey, don't tell me that. Don't tell me that, Sean. Tell that to the thousands of Swifties that are about to buy Jets tickets.
That's right. You see, he's pointing out an arbitrage. Valid arb there. I hear you, Spencer.
Thank you,
dog. I see you.
Make sure to update us on this, Spencer. I want to know if this works. Yeah.
I don't know if I'm actually going to do it, but right now, tickets for $112 on SeatGeek. You can do it. It's easy.
Spencer's all in on this trade.
The fees for these tickets is just insane. Ticketmaster, StubHub, they should be embarrassed.
Don't use those guys.
Guys, none of you guys are old enough to remember when Pearl Jam was suing Ticketmaster back in the 90s. Back then, Pearl Jam saw what was coming. And what's crazy, in retrospect, at the time, the average Ticketmaster service fee on a ticket was like $2. That's when Ticketmaster was getting sued by Pearl Jam. Look at it now. It's absolutely outrageous.
Now Swiftie is the one who fights with them, right? Doesn't she fight with everybody? She hates everybody. She's always suing people.
Yeah,
Right?
and
Her lawyers, she's gangster. Don't be hating on Taylor Swift.
she lives in New York, and her boyfriend's playing the Jets, and
Taylor
they're all
Swift
going
from
to
Bucks
the game.
County, right in my backyard.
That's true. All right. On that note, we will wrap up the show today. Thanks to our guest, Jason Leavitt. Thanks to Sean. Thanks to Kimmy. Thanks to all of you watching on YouTube, on Twitter, on stockmarketmedia.com. We appreciate that. Stay tuned for the Flow Show, 11:30 a.m. Eastern Time. So an hour and a half from now, Sean and Steve walking through some stocks with unusual options flow, coming up with a trade idea on the fly as they do. And that'll be a wrap for us here today. Smash the like, do all that good stuff, and go make some money. We'll see you guys later.
JC just broke my screen.
Happy Monday.
Run it. I can't take no